Welcome. Today we have Mr. John Addeo, Chief Investment Officer of Global Fixed Income, looking at the impact of the Fed's rate hike on income investors and how to navigate risk and volatility. So, John, how will the Fed's rate hike impact investors seeking an income?
The rate hike was widely expected and already incorporated into our investment framework. So we did not materially change our investment strategy following the Fed's decision. We will focus on the long-term ramifications of central bank policy normalization and its impact on valuations and fundamentals. Our approach is more fundamental. Rather than predicting the impact of policy decisions on interest rates, we focus instead on the lasting effects of policy change on the fundamentals of the companies in which we invest. With the income earned from credit exposure, especially U.S. high yield, on the rise, overall yield generation has increased. What's more, global yields are now higher and spreads wider, which can offer investment opportunities to investors seeking a sustainable income.
And what are the investment opportunities in global equities and in global fixed income?
We could use a differentiated multi-sleeve strategy that includes equities, fixed income, and option writing. This approach is designed to achieve a sustainable yield and stable performance. Tactical positioning will also be more prevalent this year, which means we can nimbly increase and decrease the risk profile of our investments, capturing yield opportunities as they arise. Specifically for fixed income, we are positive toward emerging market issues and will look to potentially add some local emerging market names. In particular, Latin America has some good yield opportunities and is somewhat insulated from the geopolitical risks in Europe and dislocations in China's property market. Additionally, we look to opportunistically increase our equity exposure due to the resetting of valuations and rise in market volatility.
And what uncertainties do we face? How do we cope with the current market volatility?
Uncertainties still exist, which markets dislike. The path of central bank policy, volatility in global oil, metals, and agricultural markets, as well as rising inflation and the situation in Ukraine, all increase uncertainty and by extension, volatility. We can navigate these trends with a long-term investment approach coupled with the tactical flexibility of using options. For example, we can adjust both call and put writing to enhance income and manage overall investment risk.